Hello everyone, welcome back to my YouTube channel. Today's our topic is about commercial vehicle insurance. A commercial auto policy provides coverage for vehicles that are used primarily in connection with commercial establishment or business activities. The insurance pays any cost to third parties resulting from bodily injury or property damage for which the business is legally liable up to the policy limit. While the major coverage has the same, commercial auto policies differs from a personal auto policy in a number of technical aspects. They may have higher limits and are provisions that cover rented and other non-owned vehicles, including employees. Employees can drive one car driven for company business. Several insurers offer business auto policies geared to owners of small business or specific type of businesses. Number four, expensations insurance. Employers have a legal responsibility to their employees to make the workplace safe. However, despite precaution, accident can occur. To protect employees from lawsuit resulting from workplace accident and to provide medical care and compensation for lost income to employees hurt in workplace accident. In almost every state, businesses are required by law to buy workers' compensations insurance. Workers and compensation insurance covers workers injured on the job, whether they are hurt on the workplace premises or elsewhere, or in auto accident while on business. It also covers work-related illness. Workers' compensation provides payments to injured workers without regard to who are at fault in the accident, for time lost from work, and for medical and rehabilitation services. It also provides death benefits of surviving spouses and dependents. Each state has different laws governing the amount and duration of lost income benefits, the provision of medical and rehabilitation services, and how the system is administered. For example, in most states, there are regulations that cover whether the worker or employer can choose the doctor who treats the injuries and how disputes about benefits are resolved. Worker compensation insurance must be bought as a separately business policy. In-home business and business owners policy are sold as package policies but do not include coverage for workers' injuries. Other types of business coverage. The first four coverage discussed below are different types of liability insurance policies available to business. The fifth is a form of for life insurance. There are also specialized liability policies geared to specific types of businesses. Number one, errors and omissions insurance, professional liability. Life businesses involve services such as giving advice, making recommending recommendations and designing things, providing physical care, or presenting the needs of others, which can lead to being sued by customers, clients, or patients claiming that the business failure to perform a job properly has injured them. Errors and omissions or professional liability insurance covers these situations. The policy will pay any judgment for which the insured is legally liable up to the policy limit. It also provides legal defense costs even when there has been no wrongdoing. Number two, employment practices liability insurance. Employment parties liability insurance practices liability insurance covers up to the policy limits damage for which an employer is legally liable, such as violating an employee's civil or other legal rights. In addition to buying a judgment for which the insured is liable, it also provides legal defense costs, which can be substantial even when there has been no wrongdoing. Number three, directors and officers liability insurance. Directors and officers liability insurance protects directors and officers of corporations or non-profit organization if there is a suit law claiming they manage the business or organization without proper regard for the right of others. The policy will pay any judgment of for which the insured is legally liable up to the policy limit. It also provides for legal defense costs even where there has been no wrongdoing. Number four, umbrella or excessive policies. As the name implies, an umbrella liability policy provides coverage over and above a business or liability coverage. It is designed to protect against unusually high losses, providing protection when the policy limits of one of the underlying policy have been used up. For a typical business, an umbrella policy which provides protection beyond its general liability insurance. Directors and officer liability or other types of liability insurance. The umbrella could provide protection beyond those policy limits as well. Cost depends on the nature of the business, its size, the type of risk the business faces, and the ways the business implements risk reduction. Number five, key person life insurance. The loss of a key person can be major below to small business if that person is the founder of the business or is the key contact for customer and suppliers and the management of the business. A loss of the key person may also make the running of the business less efficient and result in a loss of capital. Losses caused by the death of a key employee as insurable. Such policies compensate the business against significant losses that result from the person that are disability. The amount and cost of insurance needed for a particular business depends on the situation, implement risks reduction. Number five, key person life insurance. The loss of a key person can be a major blow to a small business if that person is the founder of the business or is the key contact for customer and suppliers and the management of the business. Loss of the key person may also make the running of the business less efficient and result in a loss of capital losses. Losses caused by the death of a key employee are insurable. Such policies compensate the business against insignificant losses that result from the person's death or disability. The amount and cost of insurance needed for a particular business depends on the situation and the age, health, and role of key employee. Key employee life insurance pays a death benefit to the company when the key employees. The policy is normally owned by the company which pays the premiums and is the beneficiary. The monies from key person deceased pay a headhunting firm to find a suitable replacement and coverage costs or expenses while the business adjusts to the loss.